Well, howdy, it's Mike again. This is going to be a real fun one. We're going to go over what was JDSU back in the heyday, back in the 98, 99 time frame. It's now VIAV is a symbol, but we're going to study it as it was JDSU. And just want to share how Bill marked this up, and then we'll, get into all the housekeeping stuff that we normally do. So let me just see. Okay, so this is how Bill marked it up in the newspaper when Bill O'Neill, the founder of IBD, marked up how to trade JDSU. Now, keep in mind, this is not how he traded it. When he marks these up, he's using his way of marking up stocks that that have had big moves in the they've had big moves in the past. He traces back to the very beginning and marks all the places where he would have wanted to buy it or add to it and then ultimately sell it. And if you study these, you know that he kind of has a certain style of doing that. That is completely different than the way I do it, but I think you should look at both and come up with your own way. There's not a right or a wrong way. There's just, there's different ways and there's a right way for you. So, I've studied in depth how he would mark things up, but then it just, what I didn't like doing is using hindsight. Like he would essentially, look at the very beginning of the move, see where that inflection point was, as, you can see it down here at this buy, and then start marking it up down there. But what I like to do a lot of times is go and do the buys beforehand. Like, okay, here's his stock that is going to have this huge advance. I'm going to buy it down here where I know I'm going to be shaken out, or even down over here. And I think that's how the right way of doing it. We're not going to focus on this today just because I don't want this to be 7 hours long. But you don't want to use hindsight, in my opinion. You don't want to use hindsight when studying things, because in the real market, you don't have hindsight. You don't know what is going to happen and that this base is going to break down for whatever reason. Could be the market, could be the stock, could be all sorts of things, just the news at the time. And then the same thing at the top. As he'd go through this, he wouldn't be, as he's going up throughout here, if it gave him sell signals that, but the stock kept going up, he would just ignore those sell signals for the most part. And that, doesn't mesh with how I like to look at things, because I like to look at the reality and I don't want to do the hindsight 2020 stuff. That's just my style. This style worked really well for him. He was a billionaire, not me. So I always keep that in the back of my mind. But I also know that he morphed over the years and over the decades on how he would look at things. And so basically he would say, okay, well, it topped up here. I'm going to look for sell signals up here. Whereas the way I prefer to do it is to do it realistically, bar by bar, going through the move and just saying, okay, if my sell signals that I would have used up here triggered earlier on, that's fine. That's the reality of the marketplace. How would I get back in, if at all? And so that's how I like to look at it move, and really forget about what had happened, what I know happened, and look at each bar. Even if I know the next bar is a big gap up or a big gap down, I'm doing my very best to be intellectually honest with myself, because I'm trying to teach myself. I'm not trying to say in hindsight I could pick the perfect pivot and the perfect top. Like, I really don't know what that does, but I like to do it going through and just seeing reality and how the wiggles and wobbles and how I would want to handle it. And then what that does is it trains your mind, so when you're in the battlefield, you start going, oh, I've seen this before, and this ends up being a very negative thing or a very positive thing. So that's what we are going to go over today, and we'll do that move. And let me just share one other thing too, to kind of give you a sense of how big this move was. Let's see. All right, so this was during the time frame of October of 1998 to when that was in October, mid October is where we had the follow through off of that double bottom. We'll look at that in a little bit, and then of course the stock market topped. The bubble peaked in, depending on how you look at, March 10th or March 14th of 2000. So I wanted to show some of the other things, like what they actually did. So SPY during this time frame was up 36%. That's a lot in a short period of time. Microsoft up 100%, Apple up to 260%, Amazon up over 200%, Oracle, that's a big one, up almost 700%, Cisco for this time frame 390%. The Qs up over 114%. Schwab won the. Can't remember if we've done that or not. If we haven't done that, make a note that we have to do that. That's one of Bill's biggies. And so, and then you've got. I'm just going to refer to this as JDSU, even though it's VIAV. It's just name change and mergers and all those types of things that end up happening. We're not going to get into that today, but let's put a couple other ones. This one, we did a Webby Rambles on the eBay, not exactly the same time frame, but you can see, that eBay was up 1600%. Although it doesn't really look like it on the chart. And then let's see, what was the big one that we haven't done yet? That's Qualcomm. Yeah, so Qualcomm was a monster. And, this one was up close to this one. So maybe I'll make a note. Maybe I'll do Qualcomm next. Bill probably made more money on Qualcomm than any stock in all of time. Not necessarily the most percent, but the most amount of money. So that would probably be worth going over. But just, this just gives you a sense of what we're dealing with. All these other ones that were, just monster stocks during that time frame. And yet these two, the Qualcomm and the JDSU, really stand out. So that's what we are going to cover during this Webby Rambles on, and I hope you guys get a lot out of this. I also wanted to just kind of share where to find all the other ones. Let's see. I should have pulled this up ahead of time, but life is busy. So let's see. Let me share this one. Where in the world is that? Oh. If I have time, I'll edit this part out because this is a little ridiculous. Sorry, guys. My mistake. Okay. So here is my YouTube channel, and I've done some things to just try to make it a little bit easier for folks to navigate around. So we've got the playlists on here, and of course, is Webby 5150. Just search YouTube for that. We've got the Hangout series, so now we've got 2 in there. By the time that this one that I'm recording right now is released, we'll probably have some more in there. I'm not sure when I'm going to release this one. I'm just getting a few in the can. So with this, we've got, we had the first one with Dawn. That was really fun. And we just released this morning, as I'm recording this on July 5th, released the one with Joe. And that one, those were both really, really, really cool. So I'll add more of them into that Hangout if you like that. It's not really an interview. It's just a couple traders talking, and I'm really excited to, I have plans to get some non-traders on here and just people that I want to, even though they do trade, to really focus more on their life in what they've done, because I've met some really, interesting folks over, that I'd like to call friends that I met via Twitter or X over the years, and I really want them to get their message out there. So we're going to do some of those. If you're just looking for some cool stuff to watch on your TV or on while you're trading, I've got this non WRO music and other cool stuff, and that's just you know got a just stuff I dig. I'm mostly on the music side, but there's also a podcast in here or clips. Like this was back, Louis Rukeyser's show clips. And if I'm on a podcast or something like that, I was recently on with David Keller. That was a lot of fun. So I've put that one in here, and hopefully we will have him on the show soon, as soon as we can arrange our schedules. Then we've got the other ones. This is just for things that don't really apply. So I think right now I only have the how I use market surge in there. I think that's of use. Then these are my favorite, the non-stock related ones, and I only have two right now, but I've got a few that I really want to do that I'll put in there. Some important things I wanted to touch on. Do one on my journey to get healthy. That's a big deal for me. And I was contemplating doing something else that might be a little controversial, so I'm going back and forth on that. I might just record it so I have it for my kids and not kids and grandkids, and not release it. I'm not sure. I'm debating that. As you know, that a large part of why I'm doing this for two parts. One, for you, so you have something that is free, that has what I believe is good quality content, that normally you would have to pay a lot of money for. And I know a lot of people just don't have the money. I didn't have the money when I was starting out to, no matter how valuable something was, to buy it. And I just, this is about karma and giving back. And I could use some karma, frankly, and some positive karma. So, just, whether I could use it or not, I'd be doing this anyways, because I just believe in giving back and trying to be, a net positive for the world. I certainly can be a negative drain on the world, when I'm not in the best of moods. So, it is what it is. You got to be honest. So, okay, that's the non-stock related ones. And I would really watch those. One was on my goals. So if you're ever interested on my journey, and the challenges that I had through that, and what I did to overcome them, I would really watch that. Whether you're a trader or not, I think anyone can benefit from both of these. And then fear, how I dealt with fear. I tend to be a worrywart. Yeah, the reality. That's just the reality. And but these weren't worry words. These were real fears, like big fears, like So how I dealt with that. Then and as I was saying, so I'm doing this. Well, we'll get into that in a second. So this is probably where most people want to start, the general market series. So we've got a bunch in here, from the first one, the precedent analysis, the 21-day, why I kind of invented that as a big part of what I do. And well, you can't invent a moving average, but really popularized it, or what have you. I'm not sure the right way to say that. Bill's follow-through day system, my take on it. Two of them on that. One on aftermaths of bear markets and crashes, and everyone's not talking about 2025 as a bear market or a crash. I don't know what they're smoking, man, because I don't care how the numbers play out on whatever, how you're looking at it. Just look at that chart. If that wasn't a bear market or a crash, you are just using the fact that it bounced back as a reason why it wasn't, because it was. That was a freaking bear market. And I don't care who you are. It was a bear market. I don't care what your spreadsheet tells you. And it was a crash. If it walks like a duck, quacks like a duck, it's probably a dog. Okay. That's dad humor. Really wasn't even funny for that. I should edit that out. Okay. So then the Webby RSI. If we have time, we might touch on that today as it applies to this one. We probably won't. I'll probably do some more on the Webby RSI, one of my inventions I'm really proud of. And then the power trend, that's something I created with Chuck and Justin. And yeah, that's a big deal, man. You should watch that. You should watch that. That's number 18. All right, let's go back. Oh, model book series. That's what this one is. And for some reason, I look at the views and like, people don't like these. That's crazy. This is the best part. This is how you learn. This is how Bill learned. I don't get it. Like every time I put one out, like I put the eBay one out and like no one's watching it. I'm like, why? Like I I could see starting it and not finishing it because I babble too much, but like not even starting to watch it. It's just this is like gold. Like people don't understand. Like the model books were locked up. Like you had to be a PM to have access to it, and that was just a static chart of it. And but going through it day by day, like that's I don't know. The mind-boggling. Yeah, eBay only 1,800 views. Like I don't get it, man. But anyways, it is what it is. I'm gonna keep putting these out because I think this is what's really important. And I'm doing this series. And I hear little things. People will say little things here or there to adjust, and I will if that makes sense. But on balance, I'm trying to create something that I would have wanted, not what other people are saying that they want. They want, a 15-minute thing. Well, I'm not given a 15-minute thing because, well, I don't know how, but also because these aren't 15-minute topics. You just can't go through eBay from the beginning to end, or Taser or Amgen or Google or Apple or Cisco or Chipotle or Priceline. Like you can't go through those in 15 minutes. It takes a lot to get something out of it. So, and I'm also trying to get something out of it. Each one of these I'm doing, I'm learning because, I'm not, I'm doing these from scratch as I'm recording them. And so it's kind of this is what I do, like in my free time, anyways. So I'm just recording these. Okay, book series. Okay. Oh, the Webby inventions. This is just the stuff I like to invent. So my loss cutting strategy, that's for position trading. I would watch that. Number 25. I would watch all of these. How and why I created things like the composite rating, the growth 250, the IPO base. Again, the 21 day is in here as well. Why I created the 3-month RS rating, the power trend that we spoke of, the RSI. So some of these are in here twice. And then probably the most important one that I would do the power trend, and I would do the quicksand Grateful Dead. That's a core part of, something I came up with, and a core part of what I do. And we'll be leaning heavily on it. So if you haven't watched that yet, you might want to watch that, before this. And then of course, probably my biggest, well, not my, probably, definitely my biggest project ever. It took me over a decade of working on to get it to where it was or is, and it's still not even perfect. And that was after a lot of work. And that's pattern rec that you see in market surge. So that is that's where to find stuff, what to do. So again, what I would probably go in and do the power trend, the quicksand, and then see what's interesting to you. I'd probably go to the 21 day and the Webby RSI, as well as all of the model book ones. I'd do them all. I mean, so I'm doing these. And so the other reason why I'm doing these is as I've mentioned in all of these, so you guys can always fast forward through the beginning because a lot of it is just kind of repeat. Sometimes I might add some new stuff, but certainly you can listen to it at 2x speed. Just a tidbit, like I like listening to things even faster than 2x, and I don't like listening to commercials. So I pay YouTube the whatever their premium, or I pay them something every month. So not just to not listen to commercials, but because it allows you to do a lot of other things like speed it up past 2x speed. So all the way up to 4x speed, which I can pretty much listen to and absorb for a lot of things. And then I'll slow it down to wherever I need to. And at first 4x will just sound like just noise, like chipmunks squeaking, but you just slowly, you go to 1 to 1.25 speed, you get used to that, and you slowly build it up. And if it's something really interesting, I'll just go down to like a 2x speed or a 1.5, or if it's really detailed, I'll go down to a 1x speed and I'll rewind and stuff. So that can get you through a lot of. I listen to a lot of podcasts and things, and so my favorite one is easily Andrew Huberman's Huberman Lab. That's really had such a positive impact on my life, and my kids are the ones who turned me on to it, and so they learned about all of that type of stuff, and so that was very helpful. But speaking of my kids, the other reason why I'm doing this is I never taught my kids how to trade. They just didn't have an interest in it, and so I didn't want to push them into it. And they're both starting their careers. They're both uh, 23 twins, and doing completely different things, different paths. And I figured, you know what, if I'm not around for whatever reason, I wanted to have what I learned there for them, and because I've spent a lifetime, learning a skill set. And if they ever were interested in trading, I wanted them to learn from me. And certainly if they end up having kids, I figure they'll have kids in 7 or 8 years, give or take, that if those kids, when they grow up, are interested in the market and they find out, oh, this is what grandpa, used to do, to learn from me, because you never know, one, how long you're going to be around, and two, which is a big deal. Like, if you're around, like, you mentally, are you going to be around enough to pass it on? And so those of you who have witnessed that, you understand what I'm talking about, and so that's a big part of why I'm doing this, because I wanted a record of things. I was going to write a book. When I have time, I'll write one, but I'm going to use these as kind of my first draft, and put a book out there. But a lot of this stuff is, little stories that I'm wanting to pass on to my kids and grandkids. And so that's what the whole Rambles is about. So if you see me kind of going off on a tangent, you're like, wow, this, every once in a while, the tangents really do help with the market. But they're mostly about life, and so I wanted to pass it on to my kids, or, future grandkids, because you never know. You just honestly don't know if you're going to be around. So it's better to have a record of it. And that's, I always told Bill, like, I'm like, well, I mean, not equating at all, but just, like, just thinking back, I always would tell him, I'm like, Bill, why don't you write a reminiscence of a stock operator? Because he wrote how to make money in stocks, which was very much like Jesse Livermore's How to Trade in Stocks, which was just the ins and outs of what exactly you do, kind of the market mechanics. But Reminiscences was more of a story, and about Jesse Livermore. And that's what I was really interested in, because I would always ask Bill for these, stories about, like, growing up or trading or whatever. And I was thinking the other day, I was at Walmart, and I always look at their t-shirts there to see, see if there's any, cool, we got some cool t-shirts. And there's this one that is a Dr. Pepper t-shirt. And I remember him telling me about how, like, Dr. Pepper was such a special thing for him growing up, because he grew up dirt poor. And I think that's why we got along so well, because my father was in the Marines, my mother was a teacher, so we were better off than the situation he was in. But it was very, very, very modest, and so we could relate. And he kind of had a thing, how we looked at kids with silver spoons, that we both knew, and we both were kind of on the same page with that. And so, anyways, he was talking about Dr. Pepper, and how, as a treat, like a very, very special treat, every once in a while they would go and get, a Dr. Pepper on the weekend. And it just made me realize how, then he ends up being a billionaire, and just, I really wish that he would have told that story. Now, obviously my story is nowhere near as important as his, but we all have a story. You have a story. Whoever's listening, you have a story. And I would suggest you do the same thing, and just record it down, and to pass on to future generations. of your family. And I was going to do this and just keep it, but then I thought, okay, I was going to put it on the cloud, like Apple Cloud or Google Cloud or something. I thought, well, what if the password doesn't get you know sent along, or like the billing doesn't get paid or something for the cloud service, and then it just goes away, and I've spent all this time recording and it just goes away. So I thought, you know what, a good place to keep it would be on YouTube, because that's probably the most likely place that videos are going to survive and be out there. So I thought I'd put this out there, and it would serve a dual purpose: one for my kids and grandkids, and then the other one for all of you. And what I never expected, frankly, was that my family would be, well, my sister and my parents would be watching this all the time. And it's like, wow, like, life is really busy, and to spend time, watching me babble on when my father trades, but my mother and my sister don't, and they never will. They have no interest, and they're watching these. And so I just want to say thank you guys. It's very kind of you. And so I'm always thinking too in terms of stories, and I've told some things, and they're like, well, I don't remember that. I don't remember that. And I'm like, wow, that's great that I'm doing this, because if they didn't even remember and something were to happen to me, like this stuff would just die with me. So I would suggest everyone do that, and especially if you've had any health issues or whatever. It's probably more important to get going on this stuff. So with that said, we are going to, the old school people know what I'm doing right now. We're going to get into this. And wow, it's only, that's 26 minutes in. That's not too good. Nothing to brag about, Mike. Okay, so let's get going. Screen share, and we are going to do it again. Let's just refresher. This is what we're going after, and let's see, let's blow this up a little bit. So Bill was starting it off down here, right, and saying, to buy it here, and there's no cells in here, right? So just buying it, adding to it, closes in the upper half. So you're holding it, adding, and this is a long way down from 17 down to 12 and change, and you're doing nothing. Like, that's tough. Tight closes, we're adding off the 10-week line, we're buying it here. I do like that he marked to buy it here, and then you round trip. That's good, because you would have to buy it there. That would be silly not to. Wow, fascinating weekly action here that he has on here, and Justin helped him out a tremendous. I wasn't involved with marking up this series in the newspaper. Now, this came out of a model book that I created, my first model book, and I did that one with Ross and Charles. And a lot of the picking of the stocks and that stuff was, we each had our different thing that we would do, and that was, a large part of that was I handled, but the three of us did this one together. So I was involved that way. But how could you not have JDSU in that model book, 97 to 2000 model book? And he's saying, okay, you're selling it here because there's a climax here. That was a climax here too. I'm sorry, man. The hindsight stuff just cracks me up. And then I guess we're going to sell it here too, because there's huge volume and stock splits. Let's look down at this volume. Well, if you trace this down, that volume isn't that high on that top week. It topped because the market topped, not because there was a big pickup in volume. So that's how I like to look at this, is just go like, I don't want to just go and see like, okay, this was the top, so I'm going to mark anything that relates there and not mark it along the way, because that's just not my style. I'm going to do, I'm really big on intellectual honesty and going through it. That's my style. But I will say, this is how Bill marked it up for himself too, not just for like outside people, for himself, for model books that he never planned on letting anyone else see, because I spent like a decade, like I would spend like a half an hour to 45 minutes a day with a magnifying glass going through his models and how he marked them up. And this is how he marked them up to himself. So it wasn't like a hindsight 2020 thing for other people. That was how he wired his brain. And I remember once having a conversation with him saying, "Oh, we should build a model book of stocks that broke out and failed." Because I thought, okay, we're studying all these ones that work. Let's study the ones that look good and fail and figure those out. And oh man, that was not a fun conversation. He's like, no, no, you know, if you do that. And at first I disagreed with him. Then I agreed with him. Now I kind of disagree with him. So he was saying that it will ingrain in your mind what a bad chart would look like, because you're always you're trying to treat your brain like it's AI, artificial intelligence. You're trying to get as much data in there as possible. So I will on a normal day look at least 5,000 charts, daily, weekly, monthly, intraday. Lots of times it'll be the same stock or ETF that I'm looking at multiple times throughout the day, but at least that many, and that's just normal. In each chart I'm looking at, it's not, oh, I want to buy this, I want to sell this. It is, I'm looking at it and I'm trying to build a database in my mind of, okay, when this happens, then this happens. And doing it in real time is very, very helpful to build that up. So, anyway, then at first I was like, he was saying, don't do it. And I'm like, oh yeah, you want to focus on what's right because you don't want to get that confused. But I do think that there's something to be said for, and I might do one, might do a series on them on failed breakouts, because I think you learn so much from the failures. In one of the last ones that we did was on my cutting loss strategy. So it's kind of like that. It's like, what happens when they don't work out? What do you end up doing? Just getting out of the starting gate and it's failing on you. So anyways, let's get, okay, for real, just teasing before. We are going to, okay, let me just move things over. Okay, so here it is on a monthly chart. They changed their symbol just to confuse us all. The VIAV, or I'm going to just refer to it as JDSU. So this is the monthly chart, and we're going to be studying it from here to, where is that? From here to here. We're gonna focus on that kind of the bubble period in those moves. And I will say, for a long time, would tell people don't study things from 97 to 99, because you'll be reinforcing things that are so unusual that won't, happen again. And now we're kind of in this market that is really reminiscent of the 90s to me. And so I want it now, for the first time, I'm studying these, and I haven't studied JDSU since I created that model book with the guys back in that would have been in like 2000 2000 or 2001 that we would have built that book. So I haven't studied this. So it is going to be very eye-opening to me as well, and we're going to learn what we learn through it. And that's the goal. Like, I'm going to be telling you how I see it, but also, you should be taking notes and going through and saying, oh, maybe there's something that I see, but I'm just not mentioning for time constraints, or maybe I just don't see it, or it's something I don't use. You still take notes of that. So we're going to focus in on this time frame. So let's go to October of 98. And let's go to just October 1st, 1998. And let's go to the weekly to kind of get a sense for what we're dealing with. So this has been a leading stock. Now let's off and on, and let's just kind of go over some basics so you all understand. We're going to lean heavily on the quicksand Grateful Dead, which I have a whole episode on. So I would look towards that, because I don't want to, if you haven't watched that already, or you haven't watched the other ones where I talk about what the quicksand Grateful Dead are, please go back and watch that, because it is a big deal, and that's what we're going to be leaning on. But again, here are the relative strength line settings that we have. So for RS1, we're using the S&P 500, and then these are all simple, not exponential at this point. The 21 day, the 8 week, and the 10 week. For RS2, we're using, again, the S&P 500, the 50-day, the 21 week, and the 24 week. And what that is your green line here is your relative strength. That's how it's doing versus the S&P. And your gold colored one, that is your shorter term moving average, and the blue one, so that's your quicksand line, and your blue one is your Grateful Dead line. So this is gonna make a lot more sense if you guys watch that other video. So let's go to it on a daily. So it's coming down, it had this little double bottom, right? That it broke out from here and failed. So if you watch, that episode on breakup failures, you'll understand how you would have gotten out of that. So now let's look at the market. So the market is falling apart, right? You had one leg down, two legs down, run up to the 10 week or the 10 a week and 50 day, as well as the 40 week and the 200 day moving average, run into resistance, and then you come back down. And that's why JDS looks so bad. So now let's go forward. I think the follow through was on the 14th. Let's see. Let's go over to the market. Okay, yeah. So we've got our day 1, day 2, day 3, day 4, day 5. So here's your day 5 follow through day. And if you don't know what a follow through day is, go ahead and watch the episode on that. It was very, very important. So this is where now you're going to give the market another chance. And let's go to VIAV, and it's nowhere in position. So if you tell me that you're buying the stock here, you're using total 100% hindsight. Underneath the 50-day, underneath the 200-day, it's closing at its lows on the day of a follow through. No, that's hindsight. Okay, so now let's go out here. So now on this day, at the end of this week, I could see someone saying, okay, they really know the story and everything. I'm not going to buy it here, but at least it's now back through your 50-day and back through your 200-day. And let's look what the market's doing. The market's back above its 21-day. So I could see that. I'm not going to do that, but you might. Now let's go out another week. And there's nothing wrong if that's your style. I'm fine buying things through a 50-day or 200-day, but in a different position. Now, out another week, I'm not really seeing an entry point. Okay, now we get a gap down in here. I'm not sure what that was about. Let's see what the market was doing when that gap down. Oh, the market was doing fine. So must have been some specific news, but it's okay. It doesn't really give you a clean entry because this structure is formed underneath that. And let's just go over to Schwab. So this is one that we'll talk about in the future, and you'll see how different Schwab was versus that one. So versus JDS. So let's go out another week. So here it's starting to form, it's kind of a cup with handle with this massive shakeout in the handle that did get support at the 200-day, but still a bit on the sloppy side. We'll go out another week. Starting to tighten up, so that's constructive. So now at this point, I'm looking at it and saying, okay, if you can get above this area, maybe this area, you could even kind of draw a line there. Maybe that would be the first time I would be considering buying this, but this is kind of a sloppy base, just being honest. Let's go out a week. Okay, so it breaks out here on the 18th. So let's go there. Okay, so this is your alternative pivot and your first time that I would really consider buying this. In your RS line, one of my requirements is I really want the RS line to be, at or preferably above its moving averages. At this point, it's just right at it. So that's saying that it's at least in line with its average versus the general market. So here would be, just a token buy for me. I'm not going to go heavy with this one, but it's closing at the highs, and it's, over this little bit of prior resistance, and it's kind of, breaking that downtrend. We'll go out a day. Okay, now you get your gap up. So it was a setup for this. So now it's starting to act the way you would expect it to act in that position. So it's giving you that feedback that, hey, this is, this might be for real. But again, let's go back to the market. Here's where the market is. So it feels like it's being just dragged by the market. Let's toggle back over to Schwab. And you can see this one is already ripped up so much. So that was your true leader at the time. But let's go out another day. So not really great action, to say the least. You've given back all of this stuff, but it's still not broken. Back then I would have used volume because volume was still clean, relatively speaking, at that point. And, volume was less than your prior day, but it's not how you're liking it. So frankly, I would have bought some here, would have added to it here, and would be really probably backing away from some of those shares here because it just is not looking the way I would have wanted it to break out. But I'm probably still keeping a token. So let's say I started off with a tiny position here, made it let's just put some numbers on it. Given that environment, and I do this would be more of a shotgun trade for me. So probably like, let's call it a 2.5% position. And on this day, I might have made it a 7.5% position. Back here, I'm probably bringing it back down to a 2.5% position, or maybe just 1.25% position. That's just me. Now that's firming up. That's good. Let's just see if it's tightening. So what you're wanting, and let me blow this up a little bit more. What you're wanting to see, and we are seeing, is the spread from the high to the low tightening up. That's telling you that it's getting more into the equilibrium. Even though that's down, it's a tight spread. That's fine. And it's, 1, 2, 3. So post-holiday time frame. Here, just half day. Let's go out. Ooh, nice. So this is where I would then be adding to it. It's finally normal. So you got this kind of V-shaped cup with handle that it broke out of. Now it went sideways. Now you have your upside reversal at the 21-day line, and your RS line is now poking up above its recent little peak there. So let's say I was completely out of it. I would buy it back here, and I'd probably buy 7.5% or maybe a 10% position, because this is now your expectation is, given its history, that the next day might be a day like this, but this is your time to really buy it. And let's go out to my sister's birthday and see what happened. Okay, well, not the type of follow through you'd like to see, some stalling action there. So I still would have intraday, knowing myself as it was getting up here and up here, I would have been adding to it, but not enough of a reason to back away from those. So you don't want to look at a day like this and go, oh yeah, I wouldn't have done anything. Well, what about at the intraday, as it's getting close to 60? Now it's gone through its kind of standard pivot of 58. Well, why wouldn't you be adding to it there? Okay. Let's see. Ooh, now the next day, you're certainly adding to it on this day, because now it's up 6%. It's really powering through. And what's interesting is you can see what the general market is actually pulling back in. So that's really nice to have something that trades counter to the market. It helps from a portfolio management standpoint. And so look at this day. This is starting to tell you the character that after a big up day, there's some sellers in there. So this day looks very similar to this day, right? And so we are going to see if we keep on noticing that. I don't know if you can hear that, but we've got a thunderstorm out here in Austin today. Man, it's sad that heard that 20 or 25 people passed away in the floods that we've had here. Man, it's just, the weather out here can be really dangerous. You got to be careful. That's just terrible. So this is odd. That's not really normal, powerful. Okay, let's go back to here, the 8th. At this point, it's normal, totally normal. But then it starts doing this dripping down. That's still relatively normal, but the next day it should really turn and go up, but it's not. So that's, you just got to be objective with that, right? And if you're using volume, which I'm saying, you got worse volume on the way down than you did on that way up. So that's a little problematic. Then now it's at least getting support where it should get support at your 21 day, and you've got a closing range. You see that in the track price where it says 61. That's saying that within that bar, it closed at the top, in the top half of it. So 50 would be the middle, 100 would be the top, 0 would be the bottom. So anything in that position over 40 is actually good. The higher, the better. Let's go out a week. We can't do this day by day. So, okay. Well, we are going to have to. So then it closes below the 21 day. That's problematic, right? Because the 21 day is a big deal now. It's not a material close below it, but I know myself, and let's see, that's 0.9, so about 1% below it. But the volume profile of this breakout isn't really working. So I'm going to have backed down from this and really waiting until it can take out this, or at least this, before I'm increasing this. And I might have brought, let's say I'd push that up to a 15% position. I might be back down to, 10% or a 7.5%. And you want to think to yourself, like, what would you be doing here? And if your answer is nothing, there's nothing wrong with that too. When I'm getting started in something, I'm thinking more in terms of swing trading. And then if I've got a gain on it, then I'll switch it to position trading. That's just me. So you want to be thinking about what you'd be doing. And now this finally some good action, because that was a slow bleed down. Now you're finally getting some power there, and I'd be buying that back or adding to it. So now I can say, as long as it stays above here and here, I'm going to hold whatever I have. If it goes below that, I'm going to probably back away from the whole thing and just start fresh, which is something I do all the time. So now we're going to add there. Still holding. Okay, I'm going to add to it there on that strength. Let's just go out a week. It's holding in tight, moved up. I would have been, adding through there. Now you're asking yourself, what size position would you have by this time? And I would say, probably at least a 10%, right? If not more. Let's go out a week. Okay, probably by this time, 10 to 12 and a half. No reason to really increase it. So it's just kind of moving around, but what's nice is it's holding that 21 day. So each stock has a character, and your goal is to try to figure out what that character is. And with this one, it looks like it wants to hold the 21 day. Not all of them do want to do that. Some of them will hold the 10 day, some the 50 day. Each one has its own character. Oh, this is nice. Okay, let's go back. Let's do it one day at a time through here. So, okay, so now it's on the 11th. Really not doing anything. You're not adding, subtracting. It's not doing anything wrong. Now on this day, I'm reducing, right? Because that is odd. Down 8%, closing well below your 21 day. 21 day was our line. So if I built this up to like a 12 to 15% position at this point, I'm asking myself, how much would I be selling and how much would I really be up? And I don't want to turn a decent gain into a loser, but I also don't want to lose my position in it. So now I'm going to look at the RS line versus its 21 day moving average, which is right here. I'll blow this up a little bit more so you can see it's through it. So the combination of those two is making me want to sell this down. So I'd probably sell this down to maybe just a 5% position, and this is assuming I don't know the story, and, I haven't put anything special on there. This is just another stock. They all had great stories. Trust me, they all had great stories. Now this day I'm going to buy a bunch back and then some, because it's making a serious stand at its 50 day, and which was near its standard pivot. in this ballpark. So that was a make it or break it day. And once you get through that, you're like, okay, now we've cleaned out all the stops, right? So everyone would have placed their stop orders in here, right? And then you had other people who were wanting to buy it at the 50-day. So that's where I'm going to be gunning it heavy. So whatever, anything that would have gotten chopped up in here, I'm just putting out of my mind and saying, okay, this is really powerful. Support at the 50-day. I'm gonna gun this and build it back up, and probably build it back up to like a 15% position. And now I'm using this as a hard stop. Like if it goes underneath that, I've got to get out of it. Okay, so nice action. Wow, look at that. That's a monster. Okay, so, and this is why we buy them back, because if not, if you didn't buy it back here and you're going back in your head and you're going, okay, on this day, what day did it? Oops, went backwards. I want to go back further. Okay, then on this day, if you didn't buy it back, you'd be telling yourself, oh, well, next time it has a bad day like that, I'm not going to sell. And then you're going to program yourself into a point where you're going to get yourself in real trouble, because most of the time they come back. But it's like Bill would always say, is like, did you buy fire insurance on your house last year? And everyone in the audience would say yes. And then they say, well, would you be upset if your house didn't burn down because you had fire insurance? And of course, everyone would say no. And this is my favorite part of the workshop, because it really set the tone for, you're going to sell things to protect yourself, but it doesn't mean the stock is going to fall apart. Okay, so let's go forward. So we've added to it up here. So now your question is just, what is your max position? Because you're trying to get closer to that. So for this series, we're saying our max position is going to be 25%. Doesn't mean that we go to 25% all the time, but we don't want to go above that. So I think on this day, we're saying it was a 15% position there. So at this point, you're looking at making a 17 and a half, or maybe 20. And so it's breaking out, it's coming in, but it's holding back above that 21 day. So even though I'm not a fan of this action, it's kind of normal, because you're looking at it saying, okay, here is your low, here is your high. Let's just do the math there. 59.25. Remember, I don't remember what happened here. 59.25 plus, or did that? And even if I did, in my subconscious, because obviously in my subconscious, I know what happens. But consciously, I'm saying I don't know what happens, because you've got to program your mind that way. 81.25, 81 divided by 2. Okay, so what I'm doing there is just taking this low plus this high, dividing it by 2, and that's what I do all the time. That's my 50% retracement, saying that it can give up that much. So it's 70.25. So what was the low here? 71. So a little bit above that, and our 21 day. This is 69. So we're looking at like, it's kind of hard. Like basically about there is where it could have come all the way into, and you don't have any information, because a 50% retracement is normal and natural. Never fun, but normal and natural. So then you're really saying, for it to really be problematic, it would have to be into here. So let's go out a week. Okay, so it turned, it came in, just tested there, didn't stay there for long, and bounced up. So that's within reason. Now, if that would have closed down there, that would have been different. Intraday trading down there, especially when you're trading high octane, is okay. Closing down there, and that's when you're talking 50% retracement. That's what I call price discovery. It's going down there, it's testing all the stops, and then moving up. Where it closes is much more material. So, on this day, I would be really adding to it. So if I had already had it at a 17 or a 20% position, I would want to be, making that like at least a 20% to 20, 21 or 22%. On this gap up, I'm looking at it going, okay, I'm going to make this close to max, like 24% or so. Now, what do we know at this point? That anytime it moves up, it likes shaking out. So that's why we're probably not going to go to 25, because now we're saying from this low to this high, we can give up half of that before we know that there's a problem. So 66.38 is that low. So let me do that. 66.38 plus, we need to add 50% retracement in here, 93.75.75. When we make our changes, I'll make sure that we do this. So basically 80.06. So let's just call it 80. So we're saying that it can come back into this level here before we know there's even anything is wrong with it. So we go out. Okay, so it's come in. So there is something wrong with it. So I'm going to have to reduce this down. Now the question is, how much do I reduce it by? Because really where I knew where it was wrong was here, right? Now it's underneath that. So I've got to do some selling, plus that RS line is going through there. So if I'm using the quicksand Grateful Dead rules, which I would have been at this point because I've got a decent gain, that means my max position can be 10% at this point. Because remember, with the quicksand Grateful Dead, just as a reminder to you, that there's 3 sell signals in there. There's the first one when you penetrate the 21-day moving average on there, that's the quick. If it goes lower from that, that's quicksand. That's another sell. So a quick is one sell of 5%. The quicksand is a sell of 5%. And then your Grateful Dead signal, if that RS line goes through this blue, you've got to sell out the whole thing. So there's a very strong possibility that we're going to get shaken out of the entire position here, and we're going to have to buy it back. So we're using the quicksand Grateful Dead rules, which say that at most that we can have are, and there's a lot of art with that, but we're just saying on the base case of the quicksand Grateful Dead rules is that we can't have more than 10% of our account in there. So maybe we've gone from a 24% position now down to had to sell a bunch. And that's frustrating. But that is the reality. Like, if you're going to sit there and say that you're not going to do anything on here, that's fine. But then you can't ramp it up to a 25% position, because if you don't take action here, because most likely it finds support right away and then moves higher. But it might not. It might come all the way into here and then form a big giant base and then go higher. And if it does that, and you've got 25% in there and you're not selling, you're going to be in a world of pain, and that's not fun. So we have a max at 10% right now. And we will speed this up because at this pace it's going to take forever. But when it makes sense, we'll switch over to a weekly. So let's go out a week. Okay, so it firmed up there. Went a little bit lower, but you did enough selling here that you didn't have to do more selling on this day. So now at this point, the RS line is back through its moving average, and it looks like it's just finding support at the 21 days. So when it took out this high here, I'd be adding some back and adding some here, but also knowing that I'm dealing with something so squirrely. I don't want to build it I don't want to go all the way back up to a 25% position. So I'm looking at this going, okay, how much do I want to risk here? Now, one thing could be you don't have to buy anything back, but I know myself that I was selling it down to 10% as a form of life insurance. Now it's going back up, and it's wiggles and wobbles because look, it went from here to here, from here to here. Now it's going from here to here. So it's in the vein of or from here to here. Like, this is its character. It hasn't changed character. So it looks like it wants to hit a higher high. So with that in mind, I'm trying to figure out how much can I build it back up to. So I'm going to say over those 2 days, these 2 blue days, I'm going to build it back up to like a 15% position, and we'll see. Probably get chopped to pieces, but it didn't get chopped to pieces, but I wouldn't be adding in here. And probably adding a little bit here, but really not that much because it's not that great of an entry, frankly, because it's kind of loose there. So maybe I make it, and I always just try to move the ball in the direction where the stock is going. So, and that's how I saw Bill do it. And that's just kind of how I'm wired too. So as it's moving up, I'm trying to increase my position size. As it's coming down, I'm trying to decrease it. So I don't get into, I'm trying to protect myself from myself by just blowing out the whole thing, which is something I do too much and I need to get away from. So with this, I'm going to increase it, but probably not much. Maybe I'll make it over these 2 days a 17.5% position. I'm not making it all the way to a 25. But ask yourself, what are you doing? Maybe you just bought it here and you're just sitting with it and you've got a 5% position and you're just saying, it's 5%. I'm going to let it doodle around. You know what's wrong with that? Nothing. Absolutely nothing wrong with that. If that's your style, do that. If you said you're going to buy a 15% position down there and you're going to hold it unless you're down 7 or 8% or until it closes below the 10-week line on a Friday, is there anything wrong with that? No, there's nothing wrong with that. There's a million ways of doing this. I'm just walking you through my style. Please use your style in with this too. You don't have to buy and sell when I do it. This is the exercise that I do on my own, and I'm just walking you guys through it. Obviously, if I did this on my own, it would take me for this whole time 10 minutes, but want to walk through and show you what I'm doing. Okay, this is now very important. So what's happened is now we've hit a higher high before a pullback. That is healthy. What you didn't want to do is come up near 90, like maybe up here, and then back away. That would be a sign of weakness. So we've got strength here. Maybe by this time, I'm building it up to, maybe I'm waiting for like a cleaner entry, but it's probably closer to 20%. But let's still call it like 18% or 19% up here. Now it's come down into the 21 day and getting support. So I'm looking at this and saying, okay, support is at the 21 day. It's trying to get support generally around there. It's not perfect, but let's do this 50% retracement thing again. So we're going to go from here to here and see where 50% is. So our low is 77.63. So 77.63 plus 96.69, 96.69 divided by 2, 87.16. Really? Wow, that came in quite a bit underneath that. What did I say? 87.16. So that was right here. So that got a lot lower, but again, on an intraday basis. So now we're sitting here going, okay, it did kind of what it did before when it did the 50% retracement. I think that was over here, but didn't close down there. So now we have some information saying, okay, we have an upside reversal where it shook out below the low of the prior day and closed near the highs. Got support at the 21 day, also had a 50% retracement and got support there. So now what I'm going to do actually is, and that we had gone up in the new highs, this is where I'm going to gun it. And I'm going to build this up to a 25% position. Also, we've got our RS line back above our moving averages here and everything. You know what? I think I missed this quicksand over here that I never spoke about. So that did go lower. So this day here, we would have had to sell more, frankly. So we would have had to, and I didn't catch that. I just caught that now. So we would have had to sell more, which would have meant we would have had to buy back more on here and here to make it meaningful and more over here. So sorry about that. I don't catch everything. But now with that RS line being so strong, I want this closer to 25% because now I can put stop on there on anything that I buy here. There, I can keep my stop on the rest of my shares wherever they are. So I'm looking at this going, okay, this is the time to gun it. Because you got to know, Kenny Rogers told us, know when to hold them, know when to fold them, know when to push it, know when to make it a max position. I think he said that. So this is where I'm going to make it a max position. And no, he didn't say that. But he alluded to it. So you're going to or I'm going to load up here and use the low of today on a closing basis as my stop for those shares. So I'm going to make this a 25er today. Let's see, do I get away with it? I really don't know. I'm nervous. If you're doing this and you're not nervous, it means you have not wrapped your head around it. You're just playing fake money. Like, we're doing fake money, but you've got to put yourself in that position. I'm nervous. I don't want to hit this. I don't want to hit this because I'm maxed out, man. I'm maxed out. Let's see what the market's doing. I'm scared. Ooh, sugar in the morning. Highs underneath the 21-day. We're right underneath the 50-day. Ooh, that's spooky. Okay. Let's see. Wait. Did I hit the wrong button? Oh, I think I went backwards. Wait. Where were we? Where in the world were we? I'm at a loss. Hold on. Let's go out to that. Oh yeah, I clicked the wrong. Okay, we were right here on the 26th. Whew, that was weird. Okay. Let's hit it. Come on, kids. I'm worried. Ooh, inside day. Was not expecting that. Okay. That's fine. Give it one more day. Now, if it can't go from here, what I'm going to do, like, that's an inside day, just down a little bit. We got out alive. But if it doesn't go from here, because this is now 1, 2, 3, 4, 1, 2, 3, 4, 5 days down in a row, and we're getting that kind of history, 1, 2, 3, 4, 5, where we had a 6th day in a row. You're wanting to be careful if you're maxed out, so what I might do, if this next day doesn't go up, I'll probably back it down to like just a 20% position to give myself some dry powder. Okay, I'm backing away now because now it broke my expectation. I was loading up. When you do a max position, even though I think it might just go higher from here, when you've got to live in reality, a downside reversal as it's starting to go up, going, wow, that's not normal and natural, and it might come and shake out underneath here. So I want to be able to live through that. So I'll probably bring this down to like a 20% position or maybe a 17.5% position until I can get back through here. So my big risk is a gap up. In fact, I'm going to bring this down to a 17.5% position because our core position is 15, but we're just going to have a little bit of extra juice on there. Okay, it's just holding in tight. No reason to, okay. So now I'm going to increase this again because now we have something to trade against. We have a higher low. This low is higher than here. And we got support again at our 21-day. And let's look over at the market. And now the market is starting to turn, but it's still underneath the 21-day, but it looks like it's starting to firm up. So we're going to build this back up. And this is just me. I just know myself. There's no point in me doing this if I don't just tell you what I'm thinking. I want to make it as close to a max as possible. But I want to have a little bit left in the tank to be able to gas it here or even here, right? So I'm going to make it like a 21 or 22% because my max is 25%. And then if it goes through there, I'm going to max it out. So let's see what happens. Ooh, boom, max it out. Finally did what we wanted. So now we've got a max. And now I'm looking, even though we've got the quicksand, Grateful Dead things to use, I'm going to use these levels as a stop for my max for that part that is from 25% down to 15%. That's going to be my line in the sand. So let's just go out a week. Okay, so now it's just inching up. So now that the 21-day is now above those stops, the stops there are on a closing basis. I'm going to use the 21-day. So I'm raising that stop up. And so that's for my shares that are from 15 to 25% of my account. And my quicksand Grateful Dead are for my, is for the bottom 15%. And that's using those. Okay, let's go out a week. Okay, a little downside reversal, but we're still maxed out. So now the decision is, okay, can we live through that or not? Now we've got an expectation with a downside reversal that we're going to undercut here, probably undercut the 21 day. So maybe I was having trouble at the 100 level. You don't always have to stay maxed out. And again, this is a Friday, so your expectation is for it to go lower. So maybe I'll just ease off the gas a little bit and go from a 25 down to 22 and a quarter or a 20, just to have locked some of that in, because typically when you pull back longer than you would have wanted. So this is our day one of our potential pullback. So you know what? We're going to bring it down to a 20% position. Okay, really firmed up nicely, but it's not really giving you a clear entry to make it a max again. On this day, I would have increased it a little bit because you got some support at the 21 day. So, but not by much. Maybe if I brought it down to 20%, maybe I made that 20 and a half or maybe 21, but not a lot. And on this gap up a little bit more, maybe a 21 or a 22. Now, I'm telling myself that because I know what I'm going to do. The reality of 2025, Mike, is going to just gun it back up to 25%. And that's been my biggest weakness is going up to my max position right away all the time, and it chops me up. So I'm trying to be a little pickier with this as I'm doing this. So let's say I'm gonna have a 22%. So I'm always thinking, how many chips do I have left to spend? I've got 3 more chips or 3 more percent to make this a 25er. And of course, we're not taking into account that if it's appreciating faster than your account, that is also going to be a bigger percent. But that's, 3-4 dimensional chess. We're just, I want to keep this relatively simple. So now I'm just looking at where to make it a max. Didn't really give us an opportunity, but we still have a really big position there. 22, let's call it 22.5%. Looking for a place to add, is holding in nicely. Looking for a place to add. Okay, so we have some funky action in here. So let's go back a little bit because that's really weird around your 21 day. So remember we said at a closing basis. So you had a wild day here on the 6th. And so on this day, you're bracing yourself for, and let's see what it looks like on a weekly. So now it's run up from here. It's had this big move, 63% closing range on a weekly. So with that type of daily action, you're thinking, oh, that was weekly after the fact. It's not as, this looks like it's on a Tuesday. So, your thought processes is probably going to come into the 21 days. So if you're not comfortable with that, with a big kind of stalling action like this, is a big spread at new highs, closing below, closing down for the day, so if you've gotten carried away, maybe you back away, and I'm going to hope that I bring this down to a 20% position because I was at a 22%, and so I'm wanting to just get some bullets, ready, some ammo ready, because I think it'll probably test the 21 day, and I want to be able to add to it, more on a day like that. So I'm going to bring this down to a 20% position in case this gets out of hand. Go forward a day, no reason to add to it. Setup day, so your expectation is for this to move higher tomorrow. So you're waiting for that, but it is weird to do that so close on there. So you're not buying it yet. Still not buying it yet because you wanted to doodle around. Just it's really firming up nicely. Still just acting nicely. Oh, okay. So that's weird. It was a little loose in here, but most likely, intraday when it was going above here, I'm going to be adding to that. So if that was a 20% position, I'm probably making that a 21% because it wasn't super tight and we're still kind of stretched from that 21 day, but you want to be increasing there. So I'm going to make it a 21%. And then, wow, it's really bad action. intraday, but it closes almost unchanged, down 0.77 after that big of a spread. So it had to have been news related. Let's see what the market was doing. Oh, upside reversal. So the market had sold off and then came back. So this one sold off with the market, and it's come back quite a bit. So that's a tough call. Now my expectation is for it to doodle around in this space for some time. And I don't know how much time that is. So even though it's come back up there by the close, I don't like that type of action. So I'm probably going to bring this down. I built it up to a 21 or 22%. Throughout that day, I'm probably going to bring this down to like a 17% or maybe even probably a 17% because the RS line is still holding up nicely. And remember that last 15%, we're using the Grateful Dead signal. So yeah, I'm going to bring it to a 17 and a half. So that's constructive, holding in there tight. Okay. Wow, that's problematic. So now we have to bring this down to, let's go back one day, make sure we didn't get any sell signals. Okay. So we were at a 17.5%, which really meant we only had 2.5% at risk. That wasn't part of the quicksand Grateful Dead because that's reserved for 15%. So now at this point, we have to sell 7.5% on this day because this RS line has come through here and given us our quick signal, down 16% for the day. So you have to take action. That's just weird action. Let's see what the market is doing. Bad data in our freaking database kills me. Sorry. Jesus. All right. So let's move forward today. So wow, that's odd action. Firming up right at the 50 days. So folks who use that, and it's not triggering a quicksand because it broke through it and it's just holding sideways and it's not quite underneath that. So we don't have the Grateful Dead signal. So we're at a 10% position based on our rules. Wow. So the RS line isn't back through the moving averages yet. So we're still just keeping that 10% because it's not a perfect entry. Okay, now it's back above it. So we can increase this up to maybe, let's say, our low is back above our 21 day. And this was a test of the 50 day. But I just don't like how it did it. So I'm only going to make this a 12.5% position. So I'm just adding 2.5% on this day. So I really haven't added, let's just go back through it. I'm not adding on this day because it's not an upside reversal and it's just holding in tight there and the RS line isn't moving up. Here, the RS line is moving up, but it's still underneath that moving average. And when in doubt, I lean on that and just say, okay, the RS line is not back above this moving average. It's almost there, so I'm not going to add. So here's our first day to add. And is that a reason to add more than 1% or maybe 2.5%? So that's how I'm thinking. So we were at a 10%. And so now I'm thinking, okay, how much do I make it? Like, let's call it 11, let's call it a 12.5% position. Let's just go out to the end of the week. Okay, so now our expectation, there wasn't any reason to, oh, wow, it came right back down through here. Okay, so I forgot that. So let's just go back. Skipping ahead doesn't work. Okay, no signal there. Okay, so now we've got our quick again. So now we've got to bring this back down to a 10% position. So we were at a 11 or a 12.5. Now we're bringing it back down to 12 because that went back underneath there. This is a can of worms, right? I'm saying I'm using the quicksand Grateful Dead rules in there, but typically you're using it to hold a winning stock. But when it's questionable around places like this, I will lean on it tactically. So if you were to say that you're not using the quicksand Grateful Dead rules there for that last little bit, that's fine because you don't really have a big gain on these shares, you have just a little bit of a loss. So you can put a 7% rule on there, and probably triggered it there. But either way, you've got a quick. Okay, it's back through there, and you've got a quicksand. So now at this point, you're reluctantly down to a 5% position. Because remember, the quicksand, Grateful Dead, there's three signals. Quick, 5% is sold. Quicksand, 5%. Grateful Dead, when this RS line goes through this moving average, that's your last 5%, and you go to cash. So let's see, we might get, looks like we're going to get stopped out of this trade and have to buy it back. Almost there. It's like borderline. Since it's above the 50-day and it's just really borderline, we're just going to hold that, but it's only 5% and we're planning on just selling it tomorrow. Wow. Shoot. Okay. Didn't sell it. Really thought we were going to sell it. But now you're back above both of those. And I just know myself. So you survive that test, quicksand, Grateful Dead test. Your RS line is now kind of going back above here, this little level. So I'm going to bring this back up, and so we were at a 5%. I'm probably bringing it to a 7.5 to a 10% position, because I'm looking at this. If that breaks it, I want to make it up to 15. So I don't want to go from a 5 to a 15 in one day if I don't have to. I mean, I'll do that all the time, but I don't want to have to. So getting started here makes sense. Okay, so now we're at 15, maybe even a 17.5% position. And so, look, this was tough. This was a tough few weeks in here, and go back and study that and be realistic and honest with yourself of how would you have wanted to trade that. I frankly think we traded it without using hindsight BS, just great. Now, if you hardly ever use the 50-day and you just want to throw in there, well, it never broke the 50-day, so I'm holding the whole thing and I'm going 100% long here at the 50-day. Well, yeah, good luck with that. Try that on some other ones, but if that's your style and that's what you do, then keep doing that. But don't pull this tool out of the toolbox because you see that it worked there. I hate that. Nothing drives me more batty than that, where people go back and they'll be like, okay, they've got their toolkit and they've got 100 tools in there, and then they see something that happened. Oh, which tool in that toolkit could I have used to stay in that, rather than just live through reality of you're going to buy and sell things and make not mistakes. You're going to have to ebb and flow with the stock. So I would go back over this whole time frame, this last few weeks, and see what you can learn. And if I did that a few times, I'd probably learn a few things. Again, I haven't really studied this in over 2 decades. Okay, let's go out. Okay, so again, let's say we have 17.5% position, holding the 21-day. Holding the 21-day. So it looks even better now because these spreads are tightening up. So it's telling you you're at equilibrium. Ooh, total setup day. Oh my God, this is beautiful. This is probably our best setup day that we've had. Now, I don't know if this works, but okay, let's go through a few things. Your RS line is above your moving averages. You're above your 21-day. You're near an area of resistance. You got your prior resistance here. You've got this line there. You've got this line here. So you've got a lot of areas of resistance in a really close. And you have a tiny spread closing near your highs. Remember, we talked about the closing range. That's 83% closing range. That's perfect. So your expectation, and this is a term that I coined. Now, I don't know if someone had it before me, just like Eddie Van Halen would say that he didn't invent tapping, he just popularized it. So it's the same thing with 21-day or the setup day. There were, probably people who called it that before, but I never heard them. So I'm going to load up here, and I'm going to probably make it a 22.5, maybe 24% position, because my expectation is for it to break out above here, maybe even make it a 25% position. and then use this as my stop because my expectations are for it to go up. And let's see. So far, this has been hard. Probably going to shake me out and then go, oh, there. Not as much as I would have thought. But let's call it, we max it out at 25% position, and I'm using this for my 25 to 15% of my account, and 15 to 0, I'm using the RS lines. So let's just go out to the end of the week. So it moves up and it's pulling back in, moved up in a new high ground. It's pulling back in normally. Let's go out a week, holding in tight. We've got our max position. Okay, so it came down and there was our line in the sand. So it just touched it. It also touched the 50-day. So when you're at a point like that, let's go over here. Let's do this one, 525. So on this day, we had a quick, not a quicksand, but we had a quick. So that means we have to sell it down to a 15% position at that point. And then from a 15 down to a 10, because that overrides, the quick overrides it. So when you have a quick signal, the most you can have in something is a 10% position. So you can see how that makes you trade a lot, right? And why some of you might be looking at this and go, well, maybe I won't go past the 15%. I'll just put it at 15%, just use a quicksand, Grateful Dead, and not juice it up. Nothing wrong with that. I just know I'm a racehorse and I like pushing it, but also learning that I learned that I have to back away. So at this point now it's down to a 10% position because it's got a quicksand. And so with that, the fact that my lines in the sand were there, I don't have to worry about that because I've always already sold those shares. So when this happens and it comes down there, I don't have to worry about that. Now it gets great support at the 50-day and it's back up here, but now I was just shaken out of a bunch of it. And I'm looking and saying, okay, I want this to just settle down and kind of prove itself because I've been trading around this for, almost 2 months and just getting chopped up in it. And so at some point you want to just say, do I have to have it as max percent? Now, well, you know what? You started off trading this over here, under 60, and now it's up, in the 136. So it's moved up a ton, even though it might not seem like it because of the wiggles and wobbles. But so now let's see, we were at a 10% position. Our RS line is back above our moving averages. And we got support at the 50-day. So probably increasing this up to like a 12.5% position. Okay, now I'm looking to see like if we can take out here or here, I'll make it a 15. Okay, so on this day, I'm making it a 15, probably maybe even a 20 because it is taken out. It had a shakeout, outside day, upside reversal type of action, closing at the highs, back above this area over here. So probably bringing it up to a 20% position. And, you don't even have to buy anything at all. Let's see what it does. Wow, that's hard. Not what you expected. No, it did it. So I'm still at a 20. I was at a 20% position, probably make it a 22 or a 20, probably, 22% position there. It's doing this thing. This character runs up, pulls in. And that's why I'm starting to recognize that and going, okay, do I want to max it out or would I rather wait for an upside reversal and max it out? So let's just, in fact, let's call it a 20% position and waiting for a better entry. Let's go out a week. Okay, so this would be a better entry. I'd rather have this because it's getting support at the fudge. Okay, well, this is the reality. Okay, so that's why I guess it's good that we didn't do that. So we have to sell here because of the quick. Very frustrating. But then now it's down to a 10%, and now with this, I'm bringing it up to 12.5. And on that day, I'm making it a 15. keeping it at 15 with that. Well, realistically, when it was up here, I would have made it a 17 and a half. So there's doesn't give me enough evidence to sell it. So you always want to look at that and think intraday, what would you have done? What would you have really done? And I know me, I would have been, I'm just keeping everything, keeping myself in check from going up to a max. So I'm trying to tone myself down. So probably 17 and a half. Nice little upside reversal. You expect further strength. Don't get it. It's acting funny. So what are we at? 17 and a half, waiting for it to break out. Okay, maybe make it a 20% there because it looks like a setup day. Okay, 22% on that strength. It's going stronger, so 23%, maybe call it 24%. So it was still at 23% because it's a bit extended. Let's go out a week. Still at 23%. Oh, man, we got out of that alive and almost undercut, but it didn't, and a bounce there. So on this day, I would have made it 25% because you get an upside reversal at the 21 day. So now I'm using that low as a line in the sand for some shares. So let's go out a week. So we're at a 25, and man, seems like every time we get up to a 25, we get this quicksand rule in here. So at the end, I was going to circle over to the weekly and using the quicksand, but we will show you that because I know this is going to drive people crazy, that all of this trading, but it is reality if you're using the daily. So at this point, and probably by over here, I'm realizing that we're up so much from the daily, from our initial entry, that really switching over to the weekly for part of these quicksand would have made sense, as well as the squirrely nature of the stock. So this is, in fact, we're going to go ahead and do that now while we're recognizing this, because I've said in some recent ones of these is that once you get a decent gain or a decent time, so kind of an or statement, like you've made 50% from your initial purchase, or even 30 or 40% switching over to a weekly, or an amount of time, like 3, 4, 5 months down, if you use the daily on this quicksand, you're going to get all these wiggles and wobbles. So it makes it a lot trickier, and you see what ends up happening. So I was trying to make this simple and to make it short and just do the daily, and then I was going to circle back and do it as a weekly at the end. But I think we're seeing with the character of this that we're going to have to switch over to blending in the weekly. And I'm still trying to find out rules of, like, because I think there's an advantage for the daily because it's going to get you out sooner when the top is really in. And an advantage to the weekly is you're not going to get what we've been seeing as this chop. You're not going to have that. So I'm still trying to figure out black and white rules, because I don't like this gray feel type of thing of, okay, when you're this many days into it from your entry, switch over to a weekly, or this many ATRs up, or this much percent up with X amount of time, then switch over to the weeklies, or what type of balance between the two of them, or even monthlies as well. So we're going to start toggling back to the weeklies for this, because we're going to see we're going to get chopped up a lot. But with that said, on this day before, if you're using the dailies, as we have been in this example, which is another reason to, let's say we were testing the 21 day out and just saying we're going to hold something until you get a close below the 21 day and then find something else to buy back, you would see that with this one, that wouldn't have worked too well, because you've got to close below it there, close below it there, close at it there, below 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 it there, there, and here. So basically the same thing, whereas it didn't do it on the 50 day at all, the red line. So with that, I just know that I'm going to use a daily and a weekly, and I'm going to use a blend of the two. And again, like I said, I don't have the exact amount, but maybe when in doubt, do 50-50. So half of what we're doing, we would be saying using the daily, and then we're going to toggle over and start using the weekly now and use half there. So half signals on a daily, half the weekly as our base case, and we'll see what we want to switch it to. And let's see. So anyways, at this point, we would have had a quick and a quicksand, which would have, here, let's do the quick. There's your quick. RS line is moving through there. So that means a maximum of 10%. And then here it's lower than a maximum of 5%. So this is on a weekly basis. So this is what it looks like on, because this is a Friday, the 23rd. So on a daily basis, we're down to 5%. Now let's toggle over the weekly, which we haven't done. And let's just say that we would have started it when you were up, let's call the standard pivot 58. And let me just do times 58 times 1.5. So up 50%. So at 87. So once we were at 87, which would have been in this area, let's call it on this day, the end of January, we were going to switch over to the weekly on here. So that would have been January 29th. So let's go over to that. And going forward, we're going to use the weekly and see how that would have played out. So right here. So at this point, we were going to switch over to the weekly and using that. So again, I think that's reasonable. You were out of the starting gate over here. We're using these holding rules on a weekly. And I guess we really should have been doing that the whole time. But, you learn from each one of these things. And frankly, doing a combo would really be helpful. So now with this, once you had your max position round over here, for that 15%, now you would still use the daily from 25 to 15% of your account. But for your core 15%, we're going to be using just the weekly on here, which it looks like we're going to get stopped out here in a little bit. But with that, so from that standpoint, from here, from this point up, we've held 15% the whole way because it hasn't triggered that on a weekly. So all of that chopping around that we did, now you can go back and look at it with that mindset. And if you were going to do this again, which that's what I used to do, I do the same stock again and again and again. And each time you're learning something different, but each time you got to put that you're thinking, your hat on, your intellectual honesty hat on, that you don't know what transpired. So you would still be selling in here the 25 to bring it down to 15 for all the different reasons that we talked about before using the chart. And you can use the daily RS line on there, but it would be along with the 21-day marked highs, marked lows, upside reversals, downside reversals, all that stuff. So let's go over to the weekly. And so at this point, we still have our full core position. We haven't been shaken out of any of that since over here. Now let's go forward a week. Looks like we're going to, it doesn't trigger it. So it just goes up from there. Let's go out a week. So you can see the benefit of switching over to a weekly once you're out of the starting gate. So it's not triggering anything. What does the monthly look like? Wow, the monthly, no problems there. Okay, go out another week. No signals, no signals, no signals. Out another week. Again, we're looking at this RS line versus here. Let's toggle over to the daily, see what that has been doing. See, it's choppy. And this is one that, kills you on a daily. Like I look at all the places where, I gun it, get shaken out, gun it and it works, but gun it, be shaken out of some in here. So it's really tricky that's the advantage of just letting letting things bake on a weekly, which is really hard for me to do, frankly. Bill was so good at that. That's why I developed these rules, really, is to try to hold in seeing how choppy they can be on a daily is why you toggle over to weekly. Over there, look, it's just monster coming out of this little area, and again, got a false breakout there or breakout that fails. Then it looks good, and then it comes in. I mean, this is a squirrely one on a daily. Got another week. It's just moving up, man. It's a beautiful thing. Real monster. Really, wow. Let's look at it on a daily. This is so beautiful. And here with this upside reversal, man, you've got to gun the heck out of that because now you've got to stop in there. So let's go back over there, 11, 12. A run up, like climax type action, and then an upside reversal there. So now you've got to stop right there. And so you can gun the heck out of that. I would. Let's go back over to weekly. Monster. It's holding in tight. 3 weeks, just almost unchanged given, very high tight flag-ish. And it breaks out of there. I mean, you're gunning that. Let's look at it on a daily. Upside reversal here at the 21 day. You're gunning it there. You're gunning it there. You're gunning it there. I mean, you've gunned it there. You've gunned it there. I mean, this is a beautiful thing, but very squirrely on a daily. The weekly really helps with things like this. Just keeps on moving up. And look, let's go through this volume stuff. If on this week here, let's go back to December 3rd, you're saying the other stuff that he had said about the volume. Well, that's your highest volume that you've had for the whole move, and it's down 5% after a climax run. How are you not selling? So like there's a lot of moving parts here if you're using just volume. Okay, so just keeps going up every week. Okay, so that's a hard week. Inside week, and it's down 16%. Let's look at that daily. That's tough, but it's doing what it's done before. You can't, it looks a little bit different than before, but you can't honestly say that, it's substantially different than these other ones. Well, it's better than this one, but these other ones came in and around the 21 day. So let's go out. Upside reversal. Oh, wait. Was that bad week that he said sell the whole thing? Hold on. Let me see. Let me stop sharing. And I'm going to share. Now that we've seen this one. Okay. So we are, we've started off down here, all this wiggle and wobble stuff. We're in up over here, and then he's saying to sell all of this in this climax. Volume subsides after climax top, which is unusual, which is true, and led to 3 more weeks up in a row, and sell on huge volume reversal and stock splits the top week. That's the stuff I don't buy, man. Like, I'm sorry, man. You're just like, you're going to sell on the top week, but you're not going to have sold this week or okay, enough of that. We all have our own way. So, all right. So I guess we were supposed to sell. No, we weren't supposed to sell in this week yet. It hasn't happened yet. We were supposed to sell the whole thing, but we were supposed to sell a bunch in this climax, which is right. That's a climax. Probably climax action at least. We'll do some on climaxes. So it's doodling around. The RS line is still above its moving averages. Okay, now it's doing what he said was unusual, which I agree. After that type of action going stronger, that's because it was a bubble market. It's moving up. Let's see what the market is doing. The market's ripping up. So, all right, and let's go out. Okay, here is a week that he said to sell the whole thing because of the pickup in volume and the splits. Well, I'm sorry. Yes, it's a stalling week. It's down 1.43, 34% closing range. Both of those are not good. Volume is higher than the prior week, but it's higher than these, but it's less than this. Looks like it's, let me see how many shares. 58,000. Trades 48,000 there, but 53,000 or million, sorry. 58 million here, 67 million here. So, I mean, is that really out of character or is that just not go higher? Anyways, but that was the top of the market, right? And would you really know that that is the top of the market? Let's look at this. The NASDAQ. We'll say we all sold there. That's a topic for another day. Man, that was weird. Weird action. Okay, so now let's go out a week. Comes down in the test the 10-week line. Now we know that that was the top of the bubble, but you don't know that at the time. Does that stock, if that stock were to run from there to 300, would you have marked this up to sell the whole thing there because of volume and splits? No, of course not. It looks like a good closing range, 61%, getting support at the 10-week line. So it's, and the RS line is still above its moving averages, so it hasn't triggered that. Now on a daily, it's triggered our, doesn't look like it's ever triggered our Grateful Dead signal. So we are going to pay attention to that on the daily to see, and that might be a balance of when you're out far enough to only act on the dailies with a small portion of it, but only if it goes through your Grateful Dead signal, your longer term moving average, which is your 50-day on there. Okay, so let's go out a week. Okay, now it's getting really nice support at the 10-week line, upside reversal. RS line is coming back in, but it's still above that. Let's see on a daily, still above the Grateful Dead signal. Go out a week. Okay, so finally we get our first signal. Let's do this best fit so you can see the whole move. So this whole move here, from down here all the way up to here, this is our first signal that we're getting of a quick on the weekly. So we saw the mess that was created by using it on the daily, and you saw the noise there. And the advantage is stepping away. You did get one test here, but not a quick sand, just a quick, it looks like, on July 23rd. But in fact, let's go back there for a second. July 23rd. Oh, so that was just a scaling. It never really went below it. Let's go out a week. Yeah, it just came close to it, but it didn't go above it. So the whole time it didn't trigger any of them until here, the end of March, where you get a quicksand or a quick because it's going through. Well, let's go back 1 week. No, it didn't quite go through it. So you get a quick. So that means now your position size has to be a 10% maximum. So if you use that quicksand Grateful Dead on the weekly from buying out from here, so at a split adjusted $7 up to, what is that, $120 before you get a sell signal, that's pretty darn good. That is pretty good. So let's go out a week. Okay. Now It doesn't go lower. But honestly, intra-week, so over here on 329, see, on this day, that was your first time that you got your, during this whole run, that you got your Grateful Dead signal on a daily right there. And it's still at its 50 day. It hasn't even broken. So you're going to want to take action there, because you've got your quick here and your first Grateful Dead on the daily. So just the reality is, wanting to take more action. Let's go out a week. So it's just sideways. Okay, so now you've got all of them. So now there's no way that you can hold this anymore. So worst case scenario, you sold your last 10% there. You sold some of it here, and then the rest of it here. Now, if you integrated the daily Grateful Dead in here, would be this. So that's what I'm learning. Like, so you always learn with things. And so I'm learning from there, just trying to figure out this way of blending. And there is something to be said for, because sometimes they trigger on the weekly, but not on the monthly. And you just go, now this one we know doesn't end up working out, but let's just see how many months until it triggered those. Let's go out to the end of July. Hadn't even triggered them then on the, and I'm not saying to use the monthly because I'm not going to use the monthly, but at some point I want to have a more of a retirement account where I use my monthly for things. But let's go out over here. So it took until, let's go out back a month. Let's go back another month. So it took until here at $94 for you to get a signal on your monthly, and there's your quick, and then end of the next month you get a quicksand, and then the end of the next month you get a Grateful Dead. So you can see how that gets you out really late using the monthly, and the daily was chopping you up too much, and that's why the weekly is kind of that Goldilocks sweet spot. And so, if you wanted to make an argument, which I think would be a fair argument, that if you're up so far on the stock up here on the weekly, that maybe wait for the monthly for 2.5% or something, like a tiny amount of it. I think there are some other rules that we could put along with that or build along with that, and it might be, I'm not sure. We'll just keep an open mind. I can think off the top of my head of a bunch of those things, but we really want to just keep an open mind. And as we do this, we'll start toggling over to the monthly there. But look at this. This is where, it got you out. And then what happens is the other part of the rule is you've got to wait for that RS line to be above both of those moving averages at minimum to start buying again. And it really, with the exception of a little blip up here, kept you out of that. Let's go out a year. 01. Look how bad that got. And let's go to the end of 01. Let's go to the end of 02. Let's go to October of 02 because that was the bottom in the market. Look how bad that got. And that's really, and let's look at this on a monthly. For all the people who are saying, oh, buy and hold, know what you want, and don't look how bad that got. That is just, and let's just go back to, let's go out to the end of 03. And it didn't come back. Let's go to the end of 10. And it still wasn't back. I mean, look at that. Let's just go to today. Okay, here it is on a monthly. You can't even see it. Let's see. Unscrunch this. Can you even see it? Oh, that's a weekly. I'm sorry. Oh, what did I do? I broke it. Hold on. I'm trying to unbreak this. I thought I was on a monthly, but now I'm on a monthly. Look at how, anyone who bought over here or was holding over there and didn't have sell rules, this stock has not come back. And that was 2000. That was March of 2000. And it's still $10. And let's look at some other ones, that did come back, like Microsoft came back, and Cisco came back. Well, still not back up to old highs. Apple, did. Amazon, did. Qualcomm, see that, did. But, would you really have wanted to hold those? So that was the VIAV. And God, but I think we learned so much from that. I learned a lot. Like I learned a lot. Let's share back again how Bill did it, or said to do it. Not how he traded, how he said to study it. So you can see a big contrast. Now maybe you take some of what Bill did, or all of what Bill did, and none of what I did, or vice versa, or really a combo of the two. Um, and with your own stuff, and have it be something that you're learning from. And that's what Bill would do all the time, would be stop sharing. He would just be learning as he was going, and changing rules, and rules that he used in the 60s he didn't use in the 70s necessarily, and ones that he had in the 70s he morphed in the 80s. And my time with him, he changed things all the time, and it was just by doing research, and using an open mind. And so that's what that's what we did here. And I learned more from this episode, I think, than anyone that we've done, and probably because I haven't looked at this in so long, and really knowing that there is that blend there between the chop that you get with the daily quicksand, Grateful Dead, and the weekly, and the blending of the two, um, in figuring that out. So that's going to be my project. Well, it was already my project, but now it's higher up on my project list, because I'm realizing how tricky that is. And it's got to be proportional, or not proportional. It's got to be a blend of the two. And most likely it's like, just throwing this out there, this is kind of my starting point as my mind is right now. Like for the first 3 months using the daily, right? And then exclusively, and then 3 months to 6 months using a blend of the two. And then after 6 months, um, then switching over to the weekly for the vast majority of it. And, just using a daily when the chart is also in trouble, and you get those breaks early in the week, like a Monday, Tuesday, or Wednesday, taking some action. Like that's where my head is. And then I'm also thinking of an or statement of time or percent gain, and I'm just saying percent gain because I'm rewiring myself to think in terms of um, of ATRs. So it'd really be more like, how many ATRs? Okay, you're up 10 ATRs from your entry point. Now you're switching over to weekly, or something like that. But or percent, like you're up 30, 30%, 40%. Now you're switching over and starting to use weekly. So I want to come up with some black and white rules, because it's really hard when you go back and you look at something historically, and this is a one-off, right? Like the Qualcomms or the JDSUs or whatever of the world. There's such huge moves that you don't want to base things off of them. You want to base them off of a larger sample before you're changing things. Now, that was different. Bill would be, whenever we come up with an idea, the two of us would always be like, just talking like, well, what if we did blah, blah, blah? Then when he liked the what if, he would say, well, go take the model book and take the first 10 stocks out of the model book, out of any random model book. And then we also had a best of book that he would tend to use. So it was, of all the model books, we tend to build a model book every 5 or 10 years. And it would take a couple of years to build. They were a big deal, that lots of work would go, sometimes more than 2 years, that into them. He would say, okay, take the best of model book and do the first 10 stocks on there and see if that rule works. That drove me crazy, because I like a large sample set, but his mind was wired differently. And so that's why I'm always sharing it with you, because he's a billionaire, not me. So I'm sharing how I think of things, but also respectfully how he would look at things, because there's a reason why he's my idol. I don't think I'm better than him. I don't think I'm remotely in the same ballpark is him, but I'm me, and he was him. So anyways, another thing about JDSU that wanted to say, like, I don't think I ever traded it. And the reason why I didn't trade it is during the 99 time frame. If you watch the goals um, uh, WRO that I did, that I was talking about how I wasn't trying to make money in the market. I was trying to prove that I knew the system and would try to buy things before he put them on the list. And from memory, he already had that one on the list. So there was no reason for me to buy it because I was just trying to prove that I could buy stocks before he put them on. Once it was on, it was like, oh, he already knew about it. So me trading it, like what was that going to prove? Now, I know how silly that is now, but at the time that was my mindset. So I didn't trade those. But also in his first and second edition of How to Make Money in Stocks, he was really geared towards small cap stocks. And JDSU wasn't in that, nor was Qualcomm. So I was staying away from those for that reason, because I was really going with what I thought Bill had said. And I bring that up because so many people I hear be like, even on IBD Live, which I'm on every Monday, Wednesday, and Friday, I'll see comments in and be like, well, Bill didn't say to do that. And, especially when some of my things that people look at as being off the reservation of like shotgunning and having a bunch of positions and stuff. And people would say like, well, Bill said that if, you didn't have a lot in a stock, that it was meaningless and you should never do that. Well, dude, you don't know what you're talking about, man. What Bill said and what Bill did were two different things. There were times where Bill capped all of his PMs, all of us, at 1% invested total account invested 1%. So how are you going to have a big position? So there are so many things that happen behind the scenes that folks don't know about. And I just say this because, like, take things with a grain of salt. Like he was saying things that were trying to he was trying to reach the masses in general. Like in general, these rules, like, it wasn't like always, like there were times where he was really spread out for him, which might be 10 stocks, maybe 12 stocks. And most of the time, he would boil them down to, 3 to 5 stocks or whatever. And I like shotgunning out, and I'll go 30 or 40 or names with a bunch of tiny positions, and the ones that are working I'll increase up, and then I'll sell off the ones that aren't working. And that's because that's my comfort level, and that gives me a way of dealing with FOMO, because I'm like everyone else. I see all these things that are ripping up, and I want to have at least a little piece of it, and having a little piece helps to mentally keep me from then just plunging in one of them. And which I still do too. I need to work on that. But like spreading out allows, fixes my FOMO. And it's my way of dealing with it, a realistic way, because if I've got 1.25% in something and it starts ripping, I can add to it. If I've got 0 in there and it's ripping, I feel this pressure like, oh, geez, I don't have this one. And, and he did it with 12. So I might do it with 20 or 30 names, so like it's fine what works for you. And if you want to do 50 names, do 50 names. You want to do 2 names, do 2 names. Do what works for you. Find that there's an advantage and disadvantage to everything, and you've got to find what works for you and blend that. But the one thing I did want to say about JDSU that I remember, and I'll never forget, because the bulk of my time was spent working for William O'Neill and Company, which was upstairs, and then a small portion of my time there was working at IBD. But I would always do things for both, but most of the time would be spent upstairs on the second floor, which was WAN, and first floor was IBD. But I remember I was downstairs at IBD. Most people would just stay in one. I was one of the few people who would go between both areas, because it was wherever Bill wanted me to help out with, whether it was WAN or IBD, I would do, or Daily Grass, which is now Market Surge, I would do, really all 3. And I was downstairs. I distinctly remember exactly where I was in the hallway, and I heard these 2 people who thought they knew how to trade, but didn't. I'm not being rude, but they thought they knew how to trade, but they didn't really know how to trade, and they literally high-fived each other in the hallway because JDSU was moving up so much. And this is really near the end. It was in the last 2 or 3 weeks of the move, and they high-fived themselves, and they were talking about the vacation they were going to take with the money that they're making in JDSU. And I just remember thinking, oh my God, we are near an end. Like, this is near an end. And you file those things away where you get people who should know better that are just euphoric, And it's the same thing near bear markets, bottoms, where people think the world is going to end, myself included. Everyone does, Bill did too, and then you hear those things and you're like, okay, we're probably near an end. You still wait for the signals, but at least you have that in the back of your mind. Like, when I heard that, I was like, I've never forgotten that, when I see people on Twitter like bragging about their trades, dude, don't do that, man. That's stupid. That is really stupid. You are going to regret it. Maybe not today, maybe not this year, maybe not next year. One day you will regret it, because it will. You'll start equating your ego with how you're doing in the market, and those are dangerous things. Your ego should be attached to your where you are in your skill set, because you're going to have highs and lows in between. And so, in trading is, I think of it as kind of like in education, you're either like, a newborn, or you're in preschool and kindergarten learning your colors, which is just your kind of your basics of like what is a pattern and stuff like that, or you're in elementary school, or you're in junior high or high school, like what level you're at, and then, or are you like a PhD or something, or are you a professor of other PhDs, like, so it's, where are you along the learning curve, and you're always learning. Like, and that's what I saw with with Bill, is even before he retired, he was still learning. He never was like he thought he had it all figured out. He was like, this is the most complicated game in the world, and he was doing everything he could to try to figure it out. And he had a bunch of us helping him out, and we still haven't figured it out. No one ever will. uh, AI won't ever. It's there's too many things. Now, you can get close, you can get better, and that's your goal. But never high five, because in that ego thing, man, ego is a dangerous thing. Be careful, because once you have an ego, man, it's gonna get smashed. It really will. Um, at least I've had a lot of problems, but I guess maybe because I struggled, some of my struggles early on, taught me to not um, have an ego, because, and then, it's just, all you have to do is do some round trips and do some silly things, or really think you have things figured out, and then have your head handed to you every now and then, to realize that, what, the market is like human nature. It needs to be respected. And no one has ever figured it out, even the best, um, the Paul Tudor Jones of the world and stuff, they're still learning. Everyone's always learning. The Stanleys of the world, and you name it, even the Jim Simons, rest in peace, the Warren Buffetts, and the Peter Lynch's, they're always figuring it out. So keep your ego in check. And was there anything else I wanted to say about that? Probably a lot, but we're 2 hours into this, and I got a lot of stuff I need to get get done. But anyways, that was that for this part. Now we're going to switch gears to the music part. If this is your first time with us, maybe watch one of the music things, see if it's for you, and if it's not, no hard feelings, man. Peace out. Have a good one. Just don't write any negative reviews about how long these are, man, or man, it pissed me off. Don't do it. But please send in ideas for future episodes. I read all of them. I haven't responded to all of them yet. I will. That's on my to-do list. I try to make progress every week on that, but I read every single one of them. I love all the comments. I really, I'm doing these for free. My payment is really knowing that I'm going to help out my kids and grandkids, decades from now, and helping you guys out. And the feedback I get really motivates me. So I really appreciate this, because I don't have the time to do this. Frankly, I really don't. But I'm making the time, and it's a big is a big time suck, but I love it. I love putting stuff out in the attempts of trying to help people. But at the end of each one of these, I switch gears and start talking about music. Um, I really started doing that because I heard some comments from folks about like some bands, like I think it was Tom Petty, that was really set me off on this. So I should do one of these on a Tom Petty album, where they're like, "Oh, I never knew about Tom Petty, and thanks for telling me about it." And I'm thinking, wow, if you don't know about Tom Petty, there's probably a lot of people you don't know about. So I started going through these at the end and going through different artists. But then I figured, I'm going to run it. If I'm doing one of these a week, or that's a goal, hopefully, I can do one of these a week, that I'm going to run out of bands real fast. So I started doing albums. So this week, we're going to go through an album like we always do, and hope so you guys get a chance to listen to it during the week, and maybe turn you on to some new music. So who do we have on today, kids and grandkids? We've got Tesla. No, not the car. Yes, I love Elon Musk, and I know half of you hate him. I love him. It is what it is. I think he's a genius, but it's not that Tesla. This is the band Tesla, and we are going to share my favorite album of theirs. And let's see, I'm going to share this. Let's see. Okay, so here is Spotify, and this is Tesla. And let's just go out to the band itself. So here are some of their most popular songs, like Love Song, Modern Cowboy, both, good songs. Love Song is what you think. It is a love song. Modern Cowboy, is good. Signs is my favorite song that they sing. Now, they did not write that. That was a little Canadian band that wrote that, but they're the ones who popularized it. And we're going to go to that album. So let's go down to their albums here. We're going to show all and just go to albums. There's some new stuff here. The 5-man London Jam. That's certainly a good one to listen to. But this is back from 1990. The 5-man Acoustic Jam. Oh my God, was this good? So there are a lot of covers in here, Coming at You Live, and then Truckin'. Who sings Truckin'? Can't think of who that could be. Just kidding. Obviously a Dead song. And some other ones in here that are good. Getting Better is a good one. The Way It Is, besides Signs, is probably my favorite original that they do on here. Really dig that song. It's not that popular. This version of a CCR tune, Lodi, I think is good, but really Freddie King, I think it does it better, and I think Freddie King does it better than CCR. Of course, a bunch of stuff like Mother's Little Helper, the Stones tune, and everything on here. Some good stuff, but this is all acoustic. This is kind of around the time where, that same general time where acoustic was starting to become popular for rock bands. And then you had the MTV Unplugged, and you had some great ones. Obviously you had Clapton's Unplugged, but you had Nirvana and a bunch of other people on there too. Just some really epic things that we'll talk about in the future. But Signs, this great song, and if you've never listened to it, please go listen to it. It's like an anthem for me. The first time I heard it, I'm like, really, let me get the lyrics out. Tesla Signs lyrics. Let's see. Well, I guess it's not. It's really the is it the 5-man Electric? That was a band, I believe. Lyrics. Okay, so we're going to stop sharing, and we're going to share these lyrics. I mean, these are so good. Okay, so let's see. And the sign said, long-haired, freaky people. I wonder who they could be referring to. Need not apply. So I tucked up my hair under my hat, and I went in to ask him why. Like, that is so profound and yet funny, you know? And he said, you know, you look like a fine, upstanding young man. I think you'll do. So I took off my hat and I said, imagine that, me looking for, working for you. Like, it's a lot of those things. And I, you know, just some great tunes. And my favorite part is when he goes into, uh, church towards the end of the song, and I don't, you know, I don't want to give it away. So you guys should go and listen to that one. It's such a good one, and you know, I can relate so much. I remember back in my late teens and 20s when I'd go into like, the girl I was with at the time, you know, was really into going into like Nordstrom and, you know, places like that, and I looked like a homeless dude. Probably I was trying to, you know, grow dreads, and, you know, was didn't wash my hair, you know, um, I always kind of looked like a beach bum. And they would follow me around the store, you know, as I was just waiting for her to be done shopping, and just, you know, just treat you poorly. Or I remember going to, on my honeymoon, in '97, you know, we went to the Ritz in Maui and saved up all this money for it that we, you know, that we didn't have to go, you know, do this honeymoon there. And I remember, you know, pulling up into the valet, and the guy's like, "You can't be here," to me. "You can't be here." I'm like, "Well, I'm checking in," you know, and then he apologized and was nice to me the rest of the time. But that's kind of how I looked. And it's like, it always reminded me of signs, like, you know, you're not supposed to be here. He didn't ask me or anything, but it was just, you know, never really cared to be, you know, have a fancy look. To me, it's, yeah, I am who I am, always have been. And so, anyways, you know, don't treat people, you know, differently because how they might appear, their skin color, their age, their preferences in life, or what have you. Treat them the way, they treat you, you know. And so, with that, we are going to wrap this up. You go listen to Tesla the band. I did get to see them for the first time this past year. Maybe it was in 24. Yeah, it was in 24 here in Austin. They came, and I'm like, I really need to go see them. And it was a great show. You should go see them. You know, it's not like a must, you know, see, but you know, they sounded great. They're the type of band who really kind of plays it close to the record, which frankly, I'm more of a fan of like, you know, the Dead, you know, Grateful Dead, Dead and Company, that plays it different, you know, live than they do on the record. That's just me, you know. But some folks like it the other way. They want to, you know, they've heard the song a million times a certain way. They want it sounding exactly like that. So that was much more like what we got from Tesla. But the, you know, the audience was into it. Everyone there was just singing along, you know, to every song, and had some good seats. So that was a good concert, and certainly um, glad that I went. And so now we're going to wrap things up the way we always wrap things up, and it is, to be kind. So that is your tuition. You do not have to pay for these. These are free because I want to help you, but I'm also trying to, you know, put good karma out there, and I'm trying to help, make a difference in the world. And I think all of us collectively who watch this, if you really do this, and everyone that you watch, you think, okay, I need to be, you know, kind to someone. Could be they can know that it's from you. They don't have to know. It could be a stranger, family member, you know, anything in between, a coworker. Do something kind. Could be little, could be huge. Open a door, help somebody out. You know, say something nice to someone who you can tell is having a tough day and needs to hear that. Just do something nice. And if we can start doing that instead of everyone trying to, you know, everyone trying to one up each other and put other people down, and, you know, all this nonsense that happens, and backstabbing, man. I keep a shirt on at all times because I've got so many scars from being backstabbed in my life that, don't have any skin left, frankly. And so you can either say, well, I've been backstabbed by everyone and their brother. I'm going to, stab people in the back too, you know, and make myself feel better. Or you can, turn the other cheek, type of, so to speak. And I think it's the harder, trust me, it's the harder thing to do. And be kind, and anyways, so that is your mission. And I hope you guys are digging these. Please share this, subscribe, and all that good stuff. But share these out because, I want to get this message out. I want people to know that there's a free source out there. And yes, I know that probably, only like 80% of this is truly, or like, no, 80% is fluff and 20% of it is truly education. But I think there's a lot of good stuff in the fluff too, so to speak. You just kind of have to find it, see it for what it is. And I hope this helped you out. And until next time, peace out.